bank reconciliation statement. A bank reconciliation statement is a statement that explains why the closing balance at the bank, according to the business cash book, is different from that of the bank statement. Given below is an example of how balances can be different. This is the balance at bank as per cash book, $3,350. This is the balance at bank according to the bank statement, $3,550. Step 1. Tick the items that appear in both the cash book as well as the bank statement. Make sure that they are entries for the same transactions by checking the dates. Note, the debits in the cash book will appear as credits in the bank statement, and the credits in the cash book will appear as debits. Why? This is because the business becomes the bank's creditors when it makes deposits into the bank account, and for the business, the bank is now its debtor. Start with the balance brought down, 5,000, 5,000, 870 on the debit side, 870 on the credit side of the bank statement, 460, 460. Now moving on to the credit side, 2,000, 2,000, 460, 460. We will now circle those items that have not been ticked, $550 and $100 in the bank statement, $560 and $400 in the cash book. The circled items in the bank statement will appear in the updated cash book. The circled items in the cash book will appear in the bank reconciliation statement. Step 2. Update the cash book. Start with the balance brought down, $4,030. This is the old balance brought down. Record the circled transactions appearing in the credit column or deposits of the bank statement on the debit side of the cash book. There aren't any here. Record the circled transactions appearing in the debit column or withdrawals of the bank statement on the credit side of the cash book. $550 insurance premium, $100 bank charges. Now balance the cash book. The balance is $3,380. This is the amount that will appear as balance at bank in the statement of financial position or the balance sheet at the end of the year. Step 3. Draw up a bank reconciliation statement. The circled items appearing on the credit side of the cash book represent unpresented checks. $400 in this case is an unpresented check. This will be added to the balance as per updated cash book that we calculated in the last step 2. $400 added to $3,380 to give us $3,780. The circled items appearing on the debit side of the cash book now represent bank lodgements not entered, $560 in this case. This will be subtracted. $550 is subtracted to give us $3,220. You will see that this amount matches the balance as per bank statement. They should match. If they don't match, you have made a mistake. Therefore, you can never get a question wrong on bank reconciliation statement because you can check your answer. If the balances do not match, go back and look for errors made and make adjustments accordingly. If you cannot calculate the updated cash book balance, then you will have to start the bank reconciliation statement with the balance as per bank statement. In that case, you will add bank lodgements not credited and subtract unpresented checks. Look at the following example taken from my book, Revising AS Accounting, a Study Guide. You will notice that cash at bank as per cash book is not available, but you are given cash at bank as per bank statement, and you will therefore start the bank reconciliation statement with balance as per bank statement of $1,000. You will now add bank lodgements not entered 240, and you will subtract unpresented checks 675. What you will end up with is the balance as per cash book. Hence, the bank statement and the cash book are reconciled. When there is an overdraft. What is a bank overdraft? A bank overdraft is a temporary loan extended by the bank to help the business through a liquidity crisis. It allows the business to withdraw more money than it has deposited in their bank account. This means that the bank statement will have a debit balance shown with a DR or O/D, and the bank column of the cash book will have a credit balance. When a firm has an overdraft, then only step 3 changes. The bank lodgements are added to, and the unpresented checks are subtracted from the cash at bank as per cash book. Remember to always add before you subtract, especially if your mathematics is not all that great. The following example has been taken from my book, Revising AS Accounting, a Study Guide. Pause the video to study the information given carefully. In order to calculate the balance as per bank statement, you will have to draw up a bank reconciliation statement. Only, this time, you will notice that $1,300 is an overdraft, as it is a credit balance in the cash book. Hence, you have to add bank lodgements not credited, $580, and you will have to subtract unpresented checks, $450. What you end up with is $1,430, which is an overdraft, and this is the balance as per bank statement. Always remember to add and then subtract. Here is an example adapted from a past paper, November 2019. Lafika is the trader. He maintains a 3-column cash book. Lafika had the following transactions in August 2018. You will have to pause the video and draw up a 3-column cash book at this stage. Video resumes. Additional information. On August 31st, Lafika's bank balance showed a bank overdraft of $812. He compared the cash book with the bank statement and found that the bank had not recorded transactions entered in the bank columns of the cash book on the following dates: August 8th, 16th, 28th, and 31st. You are required to draw up a bank reconciliation statement. Now, even though you have the balance as per cash book, having drawn up your 3-column cash book, we will start the bank reconciliation statement with an overdraft of $812 because this is the information that you have been given in the question. So balance at bank, as per bank statement, $812 overdraft. We will now add amounts not credited. Cash sales of $153 received on August 28th and not recorded in the bank statement. Cash $150, which was the additional cash over and above $20 that was paid into the bank on August 31st. You should have arrived at this amount if you had done your 3-column cash book correctly. Check not credited, $282 on August 16th. This was the check that you received from NIAC. Adding these three amounts, you arrive at an overdraft figure of $227. We now deduct checks not yet presented. On August 8th, you received a check from Tobago of $273 in full settlement of his account of $280 less 2.5% cash discount. This is now deducted. What you arrive at is the balance as per cash book, $500, still in overdraft. Check this against the balance that you have calculated in your 3-column cash book. They should be similar. If not, you have made a mistake. Go back and check where you have gone wrong. Now attempt exercises 10.6 to 10.14 from my book, Revising AS Accounting, a Study Guide. Don't forget to check the Kahoots compiled by me on this topic. They are a great way of checking theoretical knowledge and other knowledge on this topic, and it's fun. More information about AS Accounting, a Study Guide. The content of this book matches the latest CRE AS syllabus and is pitched at a level that is extremely workable. The book is written by a qualified and experienced teacher and fills the need for a guide that is solely meant for the CRE AS accounting course. Some salient features of the book are: it unpacks the CRE AS accounting syllabus, IAS terminology has been used, students love the unique question and answer presentation of theory, there are numerous tips for success, and exhaustive exercises for practice. This book is available at most book outlets worldwide, including Book Depository and Amazon. They are available in hard copy as well as in e-book format. Here are other titles available: AS Accounting Workbook, a write-in workbook that will help you prepare for your examinations, and Revising A-Level Accounting. Please contact me at junebaptista@hotmail.com for more information and for answers.